Hey traders, John Howell here. Well, the selling continues in the markets, and I want to share something with you when it comes to that. I want to share something with the fear and greed index. I want to share something when it comes to the stock market itself, and also when it comes to the mining sector and gold and silver. But I also want to share something when it comes to the interest rates, and then also some stocks that I'm actually individual stocks that I'm actually looking at, and just some of my thoughts around why right now is not the time to panic. Let's get straight into it. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Traders, actually today, as I'm doing this recording, my time, okay, which is like Sydney time, okay, tonight I am running a live webinar. It is live and I'm running it. And I only could take 100 people. I think I've got I emailed my list. I got like 80 people that have already registered for it. I only could take 20 more people, then I'm shutting it down. So if you go to johnslivetraining.com, johnslivetraining.com, or there should be a link in the description, go over there guys. I'm running this live webinar and it will be live, and I'll be there to answer your questions. And I'm gonna be sharing with you everything about what you need to do to be a good trader, what mistakes you're making, what goes into a good trading setup, and I'll hold down I didn't know what else to say there. How else do I sell my webinar? Just get your ass over there. All right. So I'll see you there tonight, which is my time. I'm actually doing this first thing in the morning, this recording. Anyway, let's have a look at what's going on in the stock market. Now, here is the big thing that happens with the stock market, okay? Because our money is in the markets, we get so emotional. We get so emotional about what is going on, and we completely missed the forest from the trees. And I've actually been speaking to some people lately, and the really interesting thing is when I'm actually speaking to them, when I'm talking to them, I've been speaking to roughly around 40 to 50 year old. So I spoke to someone yesterday that was 47, and we're talking about the markets, and I said, listen, you're almost 50 years of age. You've seen 50 years of things that happen in the markets. And I said to him, if you had to go back over time, you looked over history, right, with the property market or even the stock market, when would you absolutely love to be getting involved with the markets? And then obviously he rattled off every single time. It was the worst. It was when the Lehman Brothers was collapsing. Oh man, yes, I would have loved that. There was so much fear then. It was the COVID crash. Oh yes, I would have loved that as well too. It was, the .com crash. Oh yes, I would have loved that. Okay. Oh my goodness. As soon as oil went negative, man, I wish I just loaded up on oil. All right, etc., etc., etc. And the reason why I say that is hindsight's 2020. But foresight is your foresight. Is that right? I'm trying to sound smart here. It's like, John, stick to your layman terms. Anyway, so yes, we can look at the past and say, okay, yeah, dude, John, everyone can see that. Yes, but guess what? The same things happen again and again and again. So why am I saying that? Well, I'm actually looking at Tesla right now. I know. Why am I saying that? Because we're getting very close to that point right now. It may not be the bottom right now. Okay, we may not be there right now. Right? We may have a little bit more downside to come. We're getting very close to a major turning point in the markets. Sentiment is very negative. There's major fear in the marketplace, and most people think, that's the time I should be short in the market. What did I just say just a few seconds ago? All right. So when it comes to the stock market, and we're getting this more, we had a bit more of a selling off day today. It's really important that you remove your emotions and look at what's actually going on. We are getting ready. I don't know exactly when. I reckon over the next couple of months. It may be even this month. I don't know. But we are getting ready to have one incredible slingshot move for the second half of this year. So this whole May period may be a bit of a shake and bake. May, June, a bit of a shake and bake. Come to July and onwards, traders, I'm telling you right now, we're going to start to hit major inflection points in what I'm seeing. I'll share that with you with the interest rates and all that other stuff as well too, right? So we're seeing that right now with the actual stock market, and we're breaking down as well. And we'll continue to break down, and we'll continue to stretch further and further this one here. And we continue to stretch further and further and further away from what? From my moving average. What does that mean? Look how oversold we are. We never get too far away from the moving average. So right now would be the worst time to be trying to short the market. Don't try to short the market after it's already gone down a lot. Why? Because even if the market is going to continue down, guess what it's probably likely to do? It's probably likely to do something like this and then roll over, okay? So never short a market after it's gone down for a while. Wait for a reset. What is a reset? Down, pull back, reset, down, pull back, reset, down, pull back, reset, down. Make sense? Don't ever short it when it's going up. Same for the upside. If the market's going up, don't try to buy it there. No, smack. Back in the day when I was at school, especially my first year of year 6, I went to a new school and I almost got the cane the first day. That's how much of a brat of a kid I was. Right? It's like, no. Right? No, smack. I'll get the cane out to you, right? No, at least wait for a pullback and then try to jump in on that as it's starting to scoop up, right? As we're starting to do that stuff like that. So we are looking at that right now. Same for the Nasdaq as well too. You know, look how much we've been absolutely just really. We are going to get, guys, a slingshot move. Now, I say slingshot move. The slingshot moves mean we're probably going to get a very hard and fast snapback out of this. Very hard and fast snapback. And it's coming. Right now, yes, we've got the CPI data, and yes, everything looks really bad. And oh my goodness, it's here we go, and all that sort of fear, right? So looking at the Dow Jones as well too, you can see we actually hovered around this little support level here. Let me take that off the screen. That's not really doing much through there. But now you can see we're starting to slowly roll over. Dow Jones is actually holding up quite nicely. Like look at this. Now Dow Jones didn't. The interesting thing is the more it goes up, the more it crashes, right? So we know the tech stocks actually went up a lot. So therefore tech stocks is pulling back a lot. The reason why the Dow Jones is not pulling back a lot is because it didn't actually make a big move. You know, compared to, if we look at percentage wise from the low to the high point, it made what? It still made 94%. The S&P did what? From the low to the high, that made 120%. And even with the S&P, we're not actually like, this is all we've done here. Look at that. This is where we are. Like, we're so much higher than we were even if you bought it at pre-COVID, right? So we're so much higher than that there. So that's the first thing. And then what about the Nasdaq? Nasdaq from the low to the high point did 144%, right? So actually, look at the Nasdaq there. Now the Nasdaq, the tech stocks get hit really hard. Obviously, that's got to do with the interest rates and so on and so forth. But we can see what's going on there when it comes to that. Look at that through there. Big retracement. Look, I wonder what the retracement on that is. Are we at 50% level there? Yep, pretty much spot on 50%. We actually hit that level today. Here we go, guys. Here we go. Second half this year is going to be incredible. Actually, goes up, goes down. It's all incredible because you can just make money both ways, right? Like, it's down is not bad and up is not good, right? I just said that. Down is not bad and up is not good, right? People that just buy the stock market, yeah, that's bad or good, right? Actually, in fact, I love when I get set up and it is down because the thing goes down much quicker. So I love that. So when we're looking at that, let's actually go have a look at the interest rates, right? What am I looking at here? Oh, I'm looking at Cardano. Let me... Tech stock. All right, focus. All right, let me go back there. Let me go back to interest rates. I did an update yesterday, maybe the day before, saying we're getting towards the end of the interest rates. And you can see here we actually had a little pullback and a little last hooray. So guys, we are starting to get towards the end of this massive boom in the interest rates. We are going to see probably a hard and fast movement down. So yes, there's a lot of pressure from the interest rates here, but we're probably going to start to see something like this happening, the interest rates pulling back a bit over the next couple of months. And that's probably going to create a bit of a floor in the stock market overall, right? The stock market's not going to just go straight up to new highs, one big move up. No, it's probably going to go for a bit of a move up, then a pullback, then a higher low, and then start an upward trend, right? That's probably going to take a couple of months from here. when I say we're going for a big move second half of this year, guess what? We still have a couple of months of creating that bottom, and then away we go. That's what's probably going to happen. But as the interest rates are pulling back through here, the 10-year, that's going to create a bit of a floor in the stock market. Same for the 30-year as well too, right? We had a very, 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 very big move up. We've had this last little push and the last little final hooray. And then now we're actually probably going to start to make our way down, or at least go sideways. But to me, looking at this here, it's been a hockey stick to the upside. We've hit these major levels of resistance through here. So that tells me we're probably going to start to see a movement on the downside through here when it comes to the 30-year, and the same for the 10-year as well too, right? Hockey stick to the upside, vertical move. So we're probably going to get a hard and fast snapback, and you're already seeing we're getting an engulfing week, right? You can see the engulfing week, right? Up, 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 up. We had a very big up day, a very big up week. Then you can see now we're probably going to close that by engulfing that, and then we're probably going to start to see, we may give a little pullback here, and then we're probably going to start to see something like that, a pullback down to here somewhere, which may even go in line with a bit of a support level going through there. So they're the big things I'm looking at there, guys, when it comes to that. Let's have a look at the dollar. The dollar's obviously been screaming to the upside. Let's go look at this here. So same thing for the dollar. Yes, the dollar's been absolutely just screaming to the upside, but same thing for the dollar. We're probably going to get a very pullback. We're well into the move, right? We're well into the move. Nothing goes straight up and just keeps going straight up. And at worst, we may even start to go sideways soon. Like, look at this back here, right? We had a very big move up, and then look what happened. We actually started doing what? We started doing sideways, but we started to have at least very big sharp corrections. As you can see here, up, very big sharp correction, and now we're getting that movement through there. So the dollar's probably going to start to pull back a little bit here, or not right here. I don't know. It's going to pull back some soon, because you never know. You never know when the end of this price move is going to happen. But it does look like we're getting towards we're getting long in the tooth of this upward leg before we start to see a downward movement through there. Let's go have a look at the VIX, and man, the VIX is not even spiking yet, is it? Look at that. We're not getting a spike yet on the VIX. No spiky. No spiky. All right. So you can see here, we're still at these levels up here where, yeah, it is in history, the last sort of couple of years, the major turning points in the markets have been where it is right now. But to get a final bottom in the markets, I would expect to see something like this happening, and then maybe see like, maybe that's what's going to happen. Maybe we're going to get it. Maybe a big capitulation day is going to happen to create that bottom. So this is what I'm seeing through there. So look, actually, all right, cool. Now I can go back over here to the actual TC2000. And as I said before, if I go back to the VIX, the same thing for this chart here, right? You can see here how we're just at those levels right now. So I'd like to see the VIX maybe even spike a little bit more to get that real fear going through there. Oh, I forgot to share the fear and greed index. Back over here, fear and greed index. We can see that we're now pegging at the extreme fear. We're getting towards a major turning point, even if it is a bit of a sharp pullback against this downtrend we're in right now. Whether that sharp pullback turns into something more, I'm not too quite sure. We have to wait and see what the market does. But right now, guys, we're getting very close to a turning point. And as you know, we're very oversold, and we're getting towards, like, look at this down here. We're at a 20 reading. The maximum times, like you can see here, the maximum low, obviously like March before it took off, that had a rating of 16. We're at 20 now. So and then down the bottom here in October, down the bottom here it's 12. So you can see here, once we start to get really that 20 and below, we're starting to get to the bottom of maximum fear in the markets, and therefore the market goes moving to the upside, and plus sentiment's been going crazy as well too. I mean, sentiment's really negative. So that's what's happening through there. Let's go have a look at gold. Gold is continuing to slide to the downside. We're still sliding down, and we came up, hit this resistance, came down, hit the resistance. For me to be at all bullish on gold right now. Now, traders, this is short term, okay? Big picture, I'm long, I'm bullish gold, okay? Forget the big picture stuff. what I'm saying right now, for short-term bullishness to get into these markets, I would want to see gold start to get back above this level here, because we are in this downward leg through here. So I want to see gold start to get back above that level through there. That'll give me at least some sort of bullishness back in the short-term picture. Again, guys, big picture, over the next 5 years, I see gold making, moves to 3,000 plus. How that happens, well, that's when we start to go into the technical analysis and we read the markets, okay? So we can see here that that's what's happening with gold. So that's what I'm looking at through there. Same with silver. Silver's right at that major level of support, as you can see. And we're very, very, very long in the tooth. So again, we're probably going to get a bit of a hard and fast snapback out of, silver. As you can see through there. Maybe over now through to the GDX. GDX, again, there's still a very, 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 very big pullback in the GDX. We're not near the lows yet, like the GDXJ. We're not right there yet. So it's going to be really interesting to see what actually happens here. Do we start to pick up a bottom here in the markets, or do we just continue to slide down? If we continue to have a sliding week in the stock market, then the GDX is probably going to follow through. And the same thing for the GDXJ as well too. You can see the GDXJ actually had a bit of a gap up, and now it looks like we're about to start to flush down past this level here of support. So it's going to be really, the big telling sign for me is, one thing I'd really love to see in the gold mining sector is this, is I would love to see a big capitulation, like a big flush down like that, and then it do nothing like this, and then let's get back above here, right? So that'll create a flushing movement, flushing all the sellers out, running stops, etc., and then we start to see this massive complete reversal in the markets through there. So the one stock that I am watching right now very, very, very closely that I think is probably going to make very big moves up is Amazon. You can see Amazon has just, if we go back, especially if we go back to our moving average, we are so oversold right now on Amazon that I really do see Amazon having really big moves. Now, I wouldn't be buying it now. I never buy when the market's just falling through the floor. I would at least need to see this thing start to pick up from a higher low perspective. So I'm seeing this on the daily charts. I wouldn't buy it now, no way. But if I start to look at the hourly charts, this is what the hourly chart looks like. If I can start to get something like this on the hourly chart, where we started to get like maybe a bit of a higher low or something like that, and breaking past, that'll create a bit of a short-term uptrend. And from that, we're probably going to come back up and then at least close the gap, which is that major level of support through there. As you can see, that's that major level there where that gap is. So right now, you wouldn't want to try to buy it now, but due to the fact that we're very overextended on the daily charts, and then now we're getting a pullback, I would want to see that action happening on the actual stock market itself. So there we go, traders. The whole thing about what's going on right now is, just remember what I said when I first started this video. Firstly, if you're still watching right now, so well done. You still watched the whole video. Thank you, and thank you so much for your support. So remember what I said before. In history, in the moment, people can't see the forest from the trees, okay? So when the whole Lehman Brothers was happening, when the whole COVID stuff was happening, etc., all that sort of stuff, when was the best time to buy? When there was a lot of fear in the marketplace. What's happening right now? There's a lot of fear. Sentiment's down, fear's down, and people think this market's going to keep going down and down and down and down. Guess what? It may, I'm not telling you what to do, but it may continue down for another few weeks. But what if you did buy it now and it did continue down for another few weeks, but then 12 months from now, we're actually screaming to the upside and we're at 5,000 on the S&P? Did it really matter that we went through a bit of a shake and bake right now? So that's what's probably going to happen. Right now, on a short-term basis, we may even continue down a bit more to start to get a bit more fear in the marketplace. And then I honestly do believe that when it comes to the SP 500, I believe we're going to get something like this back here, right? There's a bit of a fear in the marketplace, and then guess what? We start to see a very big complete reversal back to the upside. So that's what I'm seeing through there, guys. But at least on a short-term basis, we're very oversold. So I wouldn't want to be shorting it right now. And looking at this, I do believe we're going to start to see a bit of a movement to the downside. So guys, there you go. Make sure you join my live webinar. Go over there right now, johnslivetraining.com. That's Johns, Johns, johnslivetrain.com. Go register for my for my live webinar that I'm running today, literally today, or the very first link in the description, guys. And I'll see you in the next video.